and we'll be starting slowly there. Okay, that's good. So before we start, guys, I want just to talk about something. Andrew today, as you know, he had a huge loss, right? And we're not going to get into details why he lost a lot, how Andrew could lose some money or anything like that. I want this just to be a reminder for all of us here. No matter how good of trader you are, no matter how long have you been trading, you will still have those blow up days. You will still lose a lot of money at one time or another. Don't get overconfident. Don't think that you are a great trader and this will never happen to you. We read about this in books, we watch this in videos, we mention this in the webinars, we mention this every time we're on the microphones, that blow ups could happen to anyone, but you will not believe it as much until it happens to you. And it will happen to everyone. It will happen to me, it will happen to you, it happened to a lot of other traders. Will all have that huge loss. I remember that day when I was watching Andrew trading live. I think it was around 2 years ago or a year and a half ago. He had a huge loss on Yale that day, and yes, it was a bad day to Andrew, but it was a good day for me because I witnessed how this happened live to Andrew and how he suffered from that loss, and I saw that this happened to a great trader. It was just a reminder for me to try reinforcing and focusing on my rules. So what happened today to Andrew should also just be a reminder to everyone here that we need to stick to our rules and that this could happen to any of us there. And now, yeah, let's go with the trade review. Hello, Jay and Samira. So Dal, GG traded Dal, traded it for a reverse ABCD pattern, the daily chart. Okay, this is what I usually do, the first thing. I look at the daily chart, right? And the daily chart is my indicator or my mainly bias. You see that the daily chart is a little bit wicky, a little bit choppy, but overall it's more weak than it's strong. Dropped down, made sort of a W shape, came back up, triple dojis up there, and today it gapped down. We don't need to remove the fact that the stock could go up and fill the gap. Stocks could fill the gaps at the same day. But this is how I do. Stock gap down, I want to trend it, take a trend trade on it to the short side. Okay? I might still trade it to the long side, but if I trade it to the long side, I will trade it only for a scalp. Long scalp, short trend trade. Pre-market, drop down, bounce back, came back up. What do we have here? An M shape. I love that on reverse ABCD patterns. Definitely I'm not going to take it to the short side here, but here this is a good sign and I love it at this stage. 1 minute chart, same thing, right? This is a good stop loss, technical stop loss. You're taking it to the short side right there for a 10-minute opinion range breakdown. It's also a new 15-minute low right there. Adding to your position at the breakout, and at the breakout I would move my stop loss to the half of the range, right? So entry at the beginning within the range, stop loss half of the range. Entry at the break of the range, stop becomes half of the range. Unfortunately, I think it didn't give you the risk to reward or the desired risk to reward, and it got you stopped out. Nothing wrong with this trade. I think it was totally fine. It just wasn't your luckiest trade there. If I was watching it, I think I would have also done the same thing on this thing. Yeah, so you managed it well. Good job on this one. Alright, so let's see what we have here. Trade on net, and you took this thing to the short side. Now this right here, anyone can tell me why I would have avoided the first entry right there, or anyone who is seeing this first entry, why would you avoid it? We mentioned this in the trade reviews, but I want you to think about them. While you're thinking, I'll read it here or there. Okay, SMA, not a reason to take it. I mean, I definitely take it. Was a short, by the way, it wasn't a long. This one was short. Yeah, Tacy. Okay, good job. That's it. Look at this. Remember what we said? We don't take a stock in the direction of the trend based on a setup on the 1 minute chart on a third consecutive 5-minute candle. Why is that? Because after a third consecutive candle or on a third consecutive candle, it could go a little bit down there without offering a good risk to reward, but then pull back. And by a pullback on the 3 consecutive 5-minute candles, I mean a new 5-minute high. Okay? So look at this. If you want to take it to the short side here, you need to know that this thing could make a new 5-minute high. You can't put your stop loss based on the 1-minute chart. It's either 3 consecutive candles like those 3 or 2 big 5-minute candles. So yeah, you took it on the third candle and pullback was to be expected. It is a setup on the 1-minute chart. It is a reverse ABCD pattern and I can see that, but I wouldn't take it based on a setup on the 1-minute chart when it is extended on the 5-minute chart. You need to see a setup based on the 5-minute chart and get your entry based on the 1-minute chart. Now here, this right here, it's more decent. Why is that? You see this week? This week means that we did a pullback and this is a new 5-minute high. The 1-minute chart also giving you a good confirmation, which is a reverse hammer. The overall direction is weak to the short side and we are having sort of an M shape right there. The 1-minute chart is also weak, right? And the same on the 2-minute chart and so. So yeah, you take it to the short side here and put your stop loss at the new high. And you got the 2-1 or 3-1, right? I think it was 2R. Yeah, it was 2R winner. So a good job holding on to it. One thing, I would have held on to this trade. I wouldn't have bailed. I would have taken the first partial at the low of the day. I would have waited for a pullback closer to the 9 where I would have added to my position and I would have taken more partials at the lows. I know eventually we would have been sold out the rated break even or somewhere up here, but still the profit after the add there and another partial would have been more than 2 hours. If you are catching a good trend and a good trade, you need to try to maximize the gains you can make on that trade. And I'll share with you 2 of my best trades I've ever had today on WKHS and CCL once we're done here. I'll also share with you a horrible trade I did on MDGS, 3 losers in a row, which was pathetic. But yeah. Now let's see what else we have there. Andrew traded CCL. Thank you, Ivan, for sharing the trade. And you traded CCL to the long side. And I see that this was a parabolic reversal for you, right? We're seeking a reversal to CCL on the 5-minute chart. It was extended from the 9 and the 5. I see that. As soon as it formed a hammer on the... a hammer, doji, and an engulfing on the 2-minute chart. This is a reverse hammer, by the way. I went to the long side. There was a lot of fakies on the 1-minute chart, but not on the 2-minute chart. Okay, see that. Set a 10-cent stop loss, which is the low of the day. Let's take a look at that. Okay, I see that. Set 10-cent stop loss. Was planning to take first 20% partial at 14.53. So on the 50 lot came in and it tripped down and I got out of it. Okay, let's take a look at CCL now. First of all, the move on CCL, it was decent. Yes, it was kind of parabolic right there, right? But the 1-minute chart wasn't that clear. This candle isn't good, and the entry, it's not bad. It's not bad. The first new 2-minute high, the first new high up there, which is not bad. But one thing though, the risk to reward. The 9 and the 5 is at 50. Your entry is at 35. Stop loss 10 cents. That's giving you 50 cents profit on risk of 10 cents. This is at the exact time you took the trade. And you know that by the moment the stock reaches your target, the 9 will get closer. With each candle opening, the 9 will get closer and closer and closer, right? So you could barely get 10 cents out of it by the moment it reaches it and goes into the 9 and the 5. Final thing, we know that stocks, they don't always go to the 9 and the 5 and bounce out of it. It could get closer to it and then bounce, right? So on parabolic reversals, it is preferable to start taking partials a little bit before the 9 on the 5. This will give you around 7 cents on average profit at the 9 on the 5 with 10 cents risk. You had the setup, you had the entry, but the target wasn't ideal for a risk to reward. When we were taking a trade, we want to have a realistic, good target, which is offering us a good risk to reward. So yeah, this trade I would have avoided it, but your exit wasn't. Yeah, your exit wasn't bad actually. It did a reverse ABCD pattern on the 5-minute chart right there. You see, it just got closer to it and bounced. I know. By the way, it got later to view up. It got to view up and then it continued the trend. But we'll never know if that's going to happen or not, right? Thank you. Guys, yeah, please send the charts to the off-topic chat, the main chat. We have members sometimes asking questions or chatting among themselves, right? And the screenshots, they just go higher and higher and higher. It just becomes difficult to find them. Okay, Walid. Walid traded plug, and let's take a look at plug starting from the daily chart, okay? On the daily chart, I could expect it to go both ways. The daily chart is really strong. It did a 3 days consolidation right there. Today it gapped down, and I would treat it similar to the 5-minute chart or the 1-minute chart. Stock could pull back to the 9 and the 5, bounce out of it. This is the 9 on the daily and continue the uptrend. So yeah, it could go either to the downside and bounce off the 9 on the daily chart, or it could just simply continue going higher. I can't really tell where it would go on the daily chart because it could go literally to any direction. The 30-minute chart looks weak to me. It's below view up and below all the moving averages. Same is the 15-minute chart and same is the 5-minute chart. This candle is definitely annoying, right? So I doubt I would have taken it to the short side on this candle. This right here, I would have definitely not taken it for one reason. This was a breakout down here. After a breakout, I want the stock to continue going, pull back, and then continue going lower. I don't want the stock to get into the range. Here, after the breakout, it went more inside more than half of the range. This is the range. It went above the half of the range. When I see that the stock is getting into the range, one thing in my head is it could make a higher low and continue going higher. We could form a reverse head and shoulders. Why is that? This would be the shoulder. This would be the head down here. And it could just simply make a second shoulder and continue going higher. When will I take it to the short side? I'd be interested in taking it to the short side if I make sure that there will be no second shoulder. Somewhere down there. So this right here is a parabolic pullback on a reverse ABCD pattern, right? A, B, C. This is a parabolic pullback. And now you saw it this way, right? Some people saw it this way. A, B, C, D. Right? So and we don't know which one of those people are or which of those people are right. Those or those. You need to make sure that one of the two guys lost this battle. And those people right here, those people will lose here. This is their stop loss. Right? So at the breakout, this is the range now. At the breakout of the range, you could take it to the long side and put your stop loss at the half of the range. And those people here will lose if you have this. If their stop loss gets triggered. Yeah, definitely. That's why after parabolic pullbacks, it's safer to wait for an M shape. You need more confirmation in your favor before executing a setup, right? You don't want to go into a 50-50. I think, yeah. Yeah, so look, earlier on the day, the first 15 minutes, maximum 30 minutes, I would trade based on the 1-minute chart because the 5-minute chart is not still set, okay? The 5-minute chart is still not set. You can't see setups on the 5-minute chart. I would trade reverse ABCD patterns on the 1-minute chart after an M shape, as long as we are not on the third consecutive candles. Later on the day, once you're starting to see a setup on the 5-minute chart, you don't want to take it based on a setup on the 1-minute chart. Later on the day or after 10 o'clock, you might want to see a setup on the 5-minute chart, and the 1-minute chart will only be a signal for your entry. Okay, so yes, there was an M shape. Where is the smaller time frame? Where is the smaller? That's it. There was an M shape on the 1-minute chart, but it was an M shape on the 1-minute chart on a setup on the 5-minute chart. There is also a W shape here, right? Against which you are going. This is like literally 50-50 battle. You want more indicators in your favor. So let's take a look at this. Oh, you built before your stop loss? Okay, that was smart. Good job. You just minimize your risk. At least, yeah, that's definitely was a good thing you did. So Nadia, let's take a look at what you did there. You traded Disney, and you traded Disney to the short side for a reversal, I see. So this is decent. Why is that? This would have made me concerned. Actually, I wouldn't have traded this reversal right there, but let's take a look. Let's break it down. Stock gapped up. When a stock is gapping up, I want to take trend trade on it. I don't want to take a reversal on it. And any short on this thing will be a scalp. Okay. If I take an extreme, if this thing gapped down here, but intraday it was uptrending, I will take it for a reversal to the short side, and I will be patient about it. I will not be partialing here or bailing here. I will hold for another pullback. I will add to my position, and my first partial will be view up. But since this thing gapped up, if by any means I decide to take it to the short side, I will definitely do whatever you did there. Early partials. Partial closer to this level right here. Closer partial at the 20 moving average. I don't know, partial at this level or closer to view up. So yeah, I would have been just partialing all the way down because this thing is strong. I would definitely not take it for a full reversal. Now we'll go for the indicators for our reversals, right? 50-minute doji at the high, new 15-minute low, cross of the 50 moving average with the 9 and the 20. I wouldn't have shorted there, maybe at least here. Here would have been my entry just to make sure it's not bouncing off the 50 moving average. Also a new 5-minute low, and then just go for the risk to reward. Yeah, so the indicators weren't bad, the gap wasn't in your favor, but it's good that you actually partialed all the way down. You didn't hold it all the way to view up, because this thing right here could have been just a pullback for a continuation after. This was, I think, yesterday, right? Or it was today? It was today, yeah, it's today actually. Thank you. TC, let's see what you saw right there. So you traded Apple and you take it to the short side. That's smart. That is really smart. Look at these guys. It's like literally below everything, right? Below view up, below moving averages, huge drop, 5-minute open range breakdown, pull back closer to view up, reverse ABCD pattern on the 1-minute chart, new 1-minute low. Those here would have been a little bit concerning for me, and I agree, I don't like this bottom wick as well. I didn't like those bottom wicks as well, but overall it's really weak. Your entry was good. Stop loss would have been up there. One thing you did not perfectly, but still there is no perfect, right, is the early partial, right? Like so early. I'd have taken a partial here, and right here it's the same level, right? Basically the same level, but here you don't have any reason to partial. It just dropped down, broke the level, and if the stock is weak, it will either flush down and give you a bigger move, or maybe pull back, retest, and then continue dropping down. So you're breaking down, it's making lower lows and lower highs. No need for an early partial, right? Right here we're forming a double bottom, and look at this, we're forming a double bottom on a third consecutive candle. You see, it could be a parabolic reversal right there with the target, the 9 and the 5, because it went so far from the 9 moving average on the 5-minute chart. So yeah, this right here would have been definitely a partial for me. New 1-minute high, I would have exited most of my position out, because I know that on a parabolic reversal the stock could pull back and go all the way to the 9 moving average on the 5-minute chart, and I will not survive the pullback on an entry around here when the pullback could be all the way up there, right? FOMO trade, you see that. But yeah, good job, Tacy. You managed this one well. So Sam traded Disney, and let's see what Sam did on Disney. Also traded it to the long side. You took it one time there. I can't see what you did right there, unfortunately, so we'll ignore those trades right there, and we'll start from this one. Flat support up here, and this is a breakout. So you are taking it at the breakout, which is nice. I have no idea why you get sucked out here. It was a really good entry. Stop loss would have been somewhere down here for me, right? The last level it bounced on or from after the breakout. Adding on the pullback, partialing all the way up, adding on another pullback, not bad, really good actually, partialing all the way up, adding closer to the pullback, and exiting on a new 5-minute low. Really good job in there. Yeah, I like what you did right there. One thing I might have not done actually is this add here, because it was literally below the 200 moving average, and we know that the moving average is an average. It could always wick a little bit above it, and if it wicks above the moving average, it doesn't mean it broke it. It could come back down, close below it, and then drop down. Just to be sure about it, I will wait for it to close above it, pull back, that's it, add, and then go for another run. So yeah, I like everything you did about that. Good job. So a friend traded Apple based on the level 2. So what do you do right there? What was your signal on the level 2? What did you see on the level 2 when you shorted it? Orders of some volume. So there were big bids below, one huge order, or multiple stacked huge bids below. So this right here on Apple, I can see what happened below. Before that, I like that this here didn't get him stopped out. If I take this thing to the short side right here, this would have been my stop loss, right? Stop loss, the last level it bounced from. You could always add more here at the breakout, or here like you did, then move the stop loss. If I add here for the breakout, I'll move my stop loss to the new level the stock bounced from. If I add right there, my stop loss will become automatically the half of the range. Dropping down, partials down there, multiple adds, which I think I wouldn't have done at this stage to the short side, unless this was long. I'm not really sure. I think it was, yeah, those were shorts and then stop out. So yeah, those shorts I wouldn't have done them, because look at this. This is the 5-minute chart, right? One 5-minute candle, another 5-minute candle, and another 5-minute candle. And I would expect a pullback after this. And by a pullback, I mean a new high. Right there for a continuation would have been a good entry. But yeah, really good job on this one. So Roman, let's see what you traded there. Nice background there. So rare to see this type of colors. So let's see what you did on Daiki NG. Traded this one to the long side and got stopped out. Yeah. And you took it one more time to the long side and it worked out. So the daily chart on this thing looks really weak for me. I would have loved this thing for a continuation to the short side. A drop, a pullback, yesterday closing as a reverse hammer. Today I would like it all the way to the daily level, so have at least yesterday's low. Definitely, I would have loved this thing. I'm not sure what it's doing right now. Let me take a look at this thing. Let's take a look at it. DKNG. It's still going up, surprisingly. But I will still be interested in it for a short side. Maybe later today we'll see. I don't even like the way it's going to the upside. It's just a little bit choppy there. Yeah, the range is so bad. It's breaking out. But yeah, I would like it if it just starts making waves to the downside. For now, it's making waves to the upper side with higher highs and higher lows. The moment it starts doing this, I would like it to the short side, and I would definitely target the lows on this thing. Now, let's come back there. Yeah, exactly, Mo. A lot of resistance above this price. Now let's go to the 5-minute chart. The 5-minute chart, this I would have avoided. Anyone? Why wouldn't I take this long there? Or why wouldn't you take this long right there? Two reasons. One which we always say over and over and over and over and over on our trade review sessions. And another simple reason as well. Yeah, exactly. It's that easy, Ed. The 9 moving average and the overall is downtrend. When the stock is downtrending, we expect it to make a pullback and a continuation. We can't just expect the stock to make lower and lower and lower and lower and lower highs. And the moment it makes a new high, we just jump, pull the triggers, and go into this thing to the long side for a V reversal. A new 5-minute high doesn't mean that the stock is going to reverse. You need more indicators. You need at least a double bottom, at least a double bottom, right? Because overall, when I see the stock making a new high after a huge drop, I might not be wrong, right? But the first thing I think about when it makes a new high, this is a pullback. It could be a reversal, but what I think about it is that this is a pullback. After a huge drop, a lot of times what's happening is a pullback and a continuation. If it's a reversal and it goes without me, I'm totally fine about it because it's so rare to catch V reversals. If every time you try to catch a V reversal and go to the long side on a new 5-minute high, you'll have a really low win rate percentage and you will get convinced not to do this thing right here. So yeah, this right here would have been safer, right? I still wouldn't take it, but this candle here would give me a little bit of hope. It just, after breakdown, at the beginning it was making a reverse ABCD pattern. It broke down, didn't reach the low of the day, got bought all the way back up and made a new 5-minute high. This would have been a little bit of confirmation for me to take it to the long side, though I doubt I would have taken it to the long side right there. See, you took it later to the long side, partial and exited, so good job. Thanks for sharing this. Let's take a look at something I did right there. I'll share with you my trades, guys. So today I traded WKHS, CCL, Apple, and a low float, MDGS. One of the first stocks I've traded was WKHS. I think CCL was the first, but anyway, one of the first stocks I traded was WKHS. Look at this. Daily chart, gap down. And what did I tell you? If I go with the direction of the gap, I will hold the stock for a trend. If I go against the direction of the gap, I will take a stock for a scalp. Okay? Especially if there is no moving average below me. And you could see that I had a huge room right here with nothing on WKHS. Like this is $1.50 of potential profit with no support areas. Now let's take a look at the 15-minute chart. Breaking the low down here. Interesting to take it to the short side. Pre-market low down here. Even more interesting to take it to the short side. 5-minute chart. What do we have here? We're having a almost 5-minute open range breakout. I think I took it earlier. Maybe for a 2-minute open range breakout. Let's take a look at what I saw on the 2-minute chart and the 1-minute chart. Really hard to tell right. Yeah, 2-minute chart. It was a 2-minute open range breakdown. Why is that? Huge drop. Pulled back to view up. Held view up. Made almost a new 2-minute low. A new 1-minute high. Low. Taking it for the breakdown. Taking it to the short side. And look at this. What's my stop loss in this thing? I didn't put my stop loss above here or here or here. I put my stop loss above the wick up there. Why is that? Because I'm getting into the position within the range. And if I get in within the range, my stop loss is the high of the range. Now look at this. A breakout is happening. A retest is happening. This is what I want to see. After breakouts, stock either flushing down or pulling back, retesting. I make sure that it's actually retesting the previous support and it's acting as a resistance. I add to my position, then I take a partial. Now we're starting to form a descending triangle along with a 5-minute opening range breakdown. I'm adding to my position, moving my stop loss, and taking partials all the way down. Now adding one more time to my position for the breakdown, but look at my average. My average is somewhere right there. After the add, that is my average, somewhere up there. And I know that if the stock goes against me after this add, now this add is chase, right? And I told you, if I didn't have this entry, and this entry, 100%, I'm not taking a stock to the short side here. But I will add on a stock which is extended, despite they are breaking my rules, for one reason, because my average will still be good. Right? I know that I will survive a pullback. My average is up there. If it pulls back to the 9 and the 5, I will still be in a trade. And look at this. It's pulling back. I don't get stopped out on it. That's it here. It's pulling back. I don't get stopped out on it. It's bouncing off the 9 and the 5. Now I'm having a setup, a reverse ABCD pattern. I'm adding to my position and starting to take partials all the way down. Now look at this. What's happening? What setup are we forming now? A descending triangle. You will see 1 touch, 2nd touch, 3 touches, one touch, second touch, third touch is a breakout touch. You will see how I over partialed over after the third touch. Why is that? Because this was my stop loss. I went in for the breakdown, and at the breakdown I put my stop loss. Remember my scalp strategy, the curling scalp strategy? And I think there was actually a member who asked me last trade review or the last time I was on the microphone on the Friday, do you still trade that curling scalp strategy? And I told him yes I do, but I've been more into trend trades, right? This is right here. I combined my style, the trend trade, with this scalp strategy. This is my confirmation that stock, when it just curls and curls and curls below the 9, I could take it to the short side with a really tight stop loss and flash down. So I added so heavily to my setup for the descending triangle pattern, moved my stop loss, and that's the reason why I over partialed at the breakdown, because just the size was heavy, and instead of having my average somewhere up there, it became somewhere down here. After I got calm a little bit with my over partials, I started partialing at the daily level and exited all out at this daily level we have here. I didn't really expect it to go lower than that or down there. Why is that? Average true range. On trend trades, I combined the average true range. You see the daily candle, how big it is? You see the average daily candle? I knew that we are actually on an average true range, or made the average true range on this stock. No need for me to be greedy and hope that it will go to 22 or 21. Here I was fully done with this trade. Another stock I traded today, CCL. This one I'm still in it. Not sure if it will go to 14. Hopefully it will, but yeah. Let's take a look at CCL. So CCL, same thing, gap down. Gap down means I'm interested in trading this thing to the short side. 5-minute chart, you see pre-market low, we're breaking the pre-market low. 1-minute chart, it did break up there, reverse hammer, maybe an entry up there with a stop loss at the high of the week, and then add at the breakout and move the stop loss to the half of the range would have been good. But unfortunately, I missed this one. I think because I entered WKHS maybe. But yeah, entering at the breakout, moving stop loss to the half of the range. Partialing all the way down, we're getting parabolic, 3 consecutive candles, and I know that anytime it will start pulling back to the 9 and the 5. And look at this now. I added, but I didn't get subbed out when it went against me. Why is that? Because I know that stocks, after drops, they pull back and they go to the 9 moving average on the 5-minute chart. So I made sure that my add will not get my average all the way down here. I added and I put an average of 1450, which is also a round number, hopefully that it will bounce out of it. After that, we're making a reverse ABCD pattern on the 15-minute chart and the 5-minute chart. I'm adding to my position, and now I know that I could put my stop loss up there, but I didn't put it up there, I put it at the half of the range. Any reason for that? 15 minutes stuck in a range, and now we're breaking the low of the range. At the break of the range, stop loss is half of the range. Taking partial closer to the level, taking another partial closer to the level. My average, I don't really remember where it was after this add, but it was still low, right? I'm adding one more time to my position, and look at this. I didn't add here, making my average up here. Anyone knows why I made my average up here? Why was this level here? Why didn't I want my average to be at 1435, 38? Or why didn't I make it at 1445? Why 1449? It is to survive a pullback, but what's significant about this level? Why did I think that at 1439 I might survive a pullback if it goes up there? Moving average, it is above it. Yes, it was above the moving average, but there was another reason. Let me draw it for you. Yes, Siri, that's actually close enough. So we're having a range here, right? We're having a range here. And after breakouts, what do I expect? I expect that the pullback might retest, right? It might get closer to it. It's not always retesting exactly at it. It might get closer to it, retest and drop down. It could retest exactly out of it, and that's what happened here. And it could a little bit go above it and then drop down. So I put my stop loss a little bit above the retest area, just in case it does the worst case scenario and goes down. If it goes inside the range by half, then I don't want to be inside this thing. So yeah, I add my stop loss somewhere up there, and I'm taking partials all the way down there. Let's see what it's doing now. Maybe I just need to bail on it actually. So yeah, now look at this. We're having a cross of the 50 moving average with the 9 and the 20. We're having double hammers on the 15-minute candles. And I think it might actually be reversing. Or if not reversing, it might make a big pullback. So yeah, I think I will just bail on it at 14.25. 14.25, I will just exit full on this position. Now, let's show you 2 other trades I've taken. Actually, on CCL, let me show you something interesting on CCL. Carlos traded CCL. Okay, guys. Let's see. Let's see. This will get to it. We'll get to this one in a second. We'll get to this as well. I think it's this one. Look at these guys. I was short in this position. You remember in CCL, I was short in it from there. It dropped down, right? And Carlos took it to the long side. He went against me. You see? He went against me to the long side. He made money on his long position and exited the rest at break even, right? So you could make money literally trading any direction depending on your setup. I was short in it. I held it through this pullback, and Carlos said that he's long on it. He said that his target is view up. Was I afraid that it might just be now reversing, Carlos long in it, and the trade okay is failing and it's not working in Carlos' favor? Maybe I should exit break even? Not really, because Carlos is trading a different style, a different setup, and I'm trading something different there, right? I'm in with the trend, and I know that with the trend, a stock might make pullbacks before a continuation. Carlos took it for a quick move, a reversal all the way to view up, a view up reversal, right? So he made his money on his side. I survived the pullback and took it to the short side right there. Apple, I traded it twice. I took it once for a parabolic reversal. This was a really huge move right there. New 1 minute high, took it to the long side and exited at break even. Why did I exit at break even? This was the first candle. It was big, but it was the first candle, and I knew that on parabolic reversals, one candle isn't enough. If I took it on the second candle, it would have been decent. So yeah, I just decided not to hold it to my max loss right there. Second time I took it to the long side is here. Why did I take it to the long side here? I saw Brian took it and he called it for bottoming somewhere down here. But I was still not convinced because of the 5-minute chart. I was afraid it will drop down, go to the 9, which it did, bounce, make a reverse ABCD pattern, and with an entry up here and the stop loss down there, I'll just not get a risk to reward, which I desire. Looking at it bouncing with the 9 and the 5 and giving me the hammer as a confirmation, I went for a scalp to the long side, stop loss at the low of the range, breaking out the range, moving my stop loss to the half of the range, partialing big up there. So let me show you. Took a partial here, took a partial closer to the 100, and exited the rest of my position at break even, which is sad because it shot higher, but unfortunately it just missed it. And my worst trade today, the worst one, is this. It was the last trade and it was pathetic actually. I tried to force it unfortunately, and I didn't respect my rules on this one. Low float, gapped up, I started trading low floats. You saw that on Twitter, right? I entered my first trade in the pre-market when it did a new 5-minute high. I was still within a range. Because of that, my stop loss needed to be at the low of the range. That was supposed to be my stop loss when I took it to the long side. And I think I would have survived the pullbacks, and it would have been a winner if I respected my rules. Took it to the long side, tightened my stop loss within the range, got stopped out. Re-entered, tight stop loss, got stopped out. Re-entered, it's actually 4 losses. Oh my god, that's horrible. This is a break even here. This is a break even trade here. Long, add, stopped out. Let's see. Let's look at that pathetic trade in the 1-minute chart. So yeah, taking it to the long side didn't look bad for me. Went up. I actually should have bailed on this one. This was actually the break of the range. Yeah, it's not even range. I don't know. It's not so clear. But yeah, in this thing, I should either had my stop loss down there, or I should have exited once it dropped down inside the range. So yeah, this was a horrible trade. A long and an add. Right, and I get stopped out. My long here was this stop loss, so I would have survived it, but I was a little bit greedy. I added to my position and I got stopped out. This long I'm not so mad about, I think, but my stop loss at the breakout should be half of the range, and I didn't do that. I didn't stick to it. I get stopped out, re-entered, and I get stopped out. So yeah, this is horrible. If I respected my rule one time, this would have been a winner because it never went down and it eventually went all the way to $4. What I needed to do there is stick to my rules, and this right here would have been a good trade. I didn't do that. So yeah, those are my trades today. Let's take a look at what Kaiser did right there. Let me quickly take a look at CCL. Maybe I need to bail on it actually. Okay, we'll bail on it soon. Now let's take a look at what Kaiser traded. So Kaiser traded Facebook, and this is something I like about this. It's in a range, right? Within a range, he's taking it to the long side, taking a partial at a level or a moving average, 100 moving average, adding to his position, and look at this. This is what I like about him. He added here, he didn't get stopped out here because he knows that it might pull back. At the retest, he added to his position, partial again at a 200 moving average, which is strong level, closer to around number 288, and then at his daily levels, right? Yesterday, he got another good trade. Entered, partial or heavy add at it supporting a level he had, partials all the way up, pulls back. Basically here we are having only the 1 minute chart, unfortunately, no 5 minute chart, but you see, pulls back, breakouts, right? No adds, pull back to a strong moving average, add, partials, because it got heavy. How many hours did you get from these trades? I don't know. I didn't take a look yet. I will take a look at it once I'm done trading. I can't really know how much I made on it because I don't know how much I added. It will be definitely more than 6 hours on a trade, or maybe 7, but I don't know exactly how much because I didn't take a look at it yet. Why do you think you ignored your rules? Because we are human and we break them every now and then, right? Unfortunately. I'm breaking them less often. Still do that sometimes. Every one of us here, I bet everyone, unless you think like a machine, which I'll be jealous of. Yeah, basically we all break our rules every now and then, but we need to be strict about them and we need to try to force ourselves to follow our rules. So yeah, do you guys have any questions? Enzo, hello Ayman. So wait to... So, Enzo, I manage my trades based on the 5 minute chart. The 1 minute chart, I only use it for entries. Only entries, sometimes for partials, closer to levels, depending on how it looks like on the 1 minute chart. But I never trade based on the 1 minute chart, unless it's the first 10-15 minutes. Yeah, and I really don't know. If you come up with exercise, make sure to share it with us. It will be really helpful for everyone. I bet we all need it. It's just the live price action. Sometimes it's fast. And I don't know. With the grid, I think it's the grid. Especially on a low float, for me it's grid. I know that low floats run a lot, and if I can have tight stop loss on a low float and catch a nice run out of it, I could make a decent profit. I've been trading them lately. You could check them on my Twitter account. The PLL, I don't know, the SPI, the other stocks. I mean, it's the grid, but you can also lose a lot on them. And today I lost for Arch and MDGS. It was not worth it. This Dan, it wasn't a decent setup because it was on the first 5 minute candle, and that's why I exited at break even. If it was a decent setup, I would have held on to it to my max loss per trade, because I know that on parabolic reversals they could pull back, make a higher low, and continue going higher. On Apple, I didn't even do that. The moment it started going to break even, I just exited at break even. It wasn't perfect. It was just the first 5 minute candle. After 10 minutes, it would have been better. So Denise traded CCL. You got the same thing, Denise. Good job. But you see, this is the problem here. And this is what we discussed when I reviewed my trade. Perfect entry. Good partial. You were actually more patient than me. You exited all out, I see. It was an all out exit. Then you are reshorting it on a reverse ABCD pattern on the 1 minute chart, but you are getting stopped out. As I told you, we know that stocks, they pull back to the 9 and the 5, right? And this is why after my add at this stage, I added here. Here I added as well, like you did. You entered here, I added here. But I didn't get sold out the moment it went against me because I knew that it could pull back, reject, and start dropping down. You see, this ad, it's the same ad we had. But it didn't get sold out because I knew that stocks, they could pull back, right? This entry and this entry were amazing, and then you are exiting all down. One thing I would recommend is not exiting all out right there. A reverse ABCD pattern, ascending triangle, descending triangle, pennants, I don't know, open range breakouts, bull flags, bear flags, whatever breakout setup. Those are breakout setups. If a setup is good, it will break out and it will give you some money. If you are getting into breakout setup, try to hold on for a breakout. I don't mean just it's either a breakout or it's a break even. Okay? It's either a breakout or you exit the moment it's starting to make a setup against you. Okay? You could take a partial or a big partial closer to the low of the day. Even if it's 80% partial, take 80% partial, but leave 20% for the breakout. Because that's when the trend starts and when you can maximize your profits. Yeah, you could take big partial, even 90%, right? You'll capture some profit. You don't need to exit all out. But if it's your style to exit all out once you're hitting your goal, don't change it because I said that. Definitely keep trading the way you are, the way you're trading, as long as it's working for you. So yeah, any other questions, guys? You will work it and you'll definitely figure it out. So yeah, that will be it for today, guys. Trade safe. I'll be in the chat room. If you have any questions, feel free to email me at aim@beautifultraders.com. Guys on YouTube, I'm typing my email. Feel free to email me if you have whatever question you have, and I'll be happy to help. Have a good day, everyone, and bye-bye.